Hello guys, welcome to another video. We'll cover another sum on interest on capital in this video with a little different scenario. So let's get started. Here's the question that we have. So we have a balance sheet given to us. This is the balance sheet of A and B who share profits and losses in the ratio 3:5, and we are required to calculate interest on capital at the rate 6% per annum for the year ending 31st March 2020. Let's see what we have in the balance sheet. We have capital accounts of A and B as on 31st March 2020, which is 40,000 and 50,000 respectively. We have PL appropriation balance of 20,000 and we have sundry assets worth rupees 1,10,000. Point to be noted here is that the capital accounts which are given here are the closing capital as on 31st March 2020. So in this case, we need to calculate the opening capital first. As per the rule that we covered in the previous video, interest on capital is always calculated on the opening capital. We will see this in the later part of the video, how it's calculated. What more do we have in the question? On 30th September 2019, A introduced an additional capital of rupees 8,000 and on 1st Jan 2020, B introduced rupees 10,000. Drawings of A and B during the year were rupees 6,000 and rupees 8,000 respectively. Profit earned during the year was rupees 60,000. So now let's see how we go about calculating interest on capital. The first step that we have, it is calculation of opening capital as on 1st April 2019 based on the given information. So we'll be doing a back calculation here. We are starting with the closing capital, as you can see at the top, of A and B, 40,000 and 50,000 respectively. We're adding drawings during the year for them, respective drawings. We are adding it back, 6,000 for A and 8,000 for B. That gives us 46,000 and 58,000. Now we are subtracting the additional capital they have introduced during the year, 8,000 for A and 10,000 for B. That gives us 38,000 and 48,000. And finally, we are subtracting the profit which is already created to the partners. There is a note here. As you can see, the profit earned during the year was 60,000. However, there was a balance in the balance sheet for PL Appro which was 20,000. So net profit was 40,000. And this is distributed among the partners in their profit sharing ratio of 3:5, which comes to 15,000 and 25,000. After subtracting this, we get their opening capital as 23,000 for A and same for 23,000 for B. After we have calculated the opening capital, we move on to step 2. We calculate the interest on capital. So let's see for A, the interest on capital on 23,000 on the opening capital for 1 year at the rate 6% per annum is 1380, and the additional capital of 8,000 which A introduced on 30th September, so that gives us a 6 months time period at the rate 6% per annum, so 240 is the interest on that. So total interest on capital for A is 1620. Let's see for B how it's done. For B as well, on the opening capital for 1 year, the interest on capital is 1380, as the opening capital is same 23,000 for entire year at the rate 6% per annum. On additional capital which be introduced rupees 10,000 on 1st Jan, that is being utilized for 3 months in the current year at the rate 6% per annum, the interest is 150 rupees. So total interest on capital comes to 1530. So that's how we calculate interest on capital when closing capital is given to us. So first we calculate the opening capital and then we go about calculating the interest. Thank you guys for watching. I hope this video was helpful in clarifying some of the concepts on interest on capital. Feel free to drop in your questions in the comment box below. I'll be more than happy to answer them. We'll catch up with you on another video with some more interesting facts about interest on capital and some other topics on accounts. Till then, happy learning guys. Take care.